Capital flows through the global system with a distinct center of gravity, drawing resources and investment toward the North American coast. This chart compares the annual economic output of the United States to its three closest competitors. At over $31.8 trillion, the U.S. accounts for 26% of the entire global nominal GDP. This scale is supported by the U.S. dollar's status as the world's primary reserve currency. A reserve currency is a foreign money held in large quantities by central banks to pay off international debt and settle global transactions. This status allows the U.S. to dictate global supply chains and international trade pricing. It serves as the foundation for the petrodollar system, the global requirement that oil exports be traded and settled in U.S. currency. Sustaining this global gravity requires specific internal mechanics. To find them, we must look at the individual components of the engine itself. This pie chart illustrates the specific breakdown of the U.S. economy by sector. The tertiary sector accounts for 80.2%. In 2022, 68% of the total economy was fueled purely by the domestic spending of American citizens. With 2/3 of the GDP tied to local spending, the nation functions as a hyper-consumerist engine, powered by the purchasing power of its own people. Directing that purchasing power requires a massive financial infrastructure. The New York Stock Exchange acts as the world's most efficient coordinator of capital and risk, moving billions of dollars into new investments daily. This financial depth enables the U.S. to spend more on research and development than the rest of the G7 nations combined. The G7 is an intergovernmental forum consisting of 7 of the world's largest advanced economies. Much of this spending is funneled through venture capital. Venture capital is a form of private equity, where investors provide funding to early-stage startups that have high growth potential but carry high risk. The result is a landscape of corporate technology campuses that dominate global innovation in software, artificial intelligence, and aerospace. Massive capital seeks out disruptive ideas, funds their expansion, and uses the resulting profits to fuel the next cycle of growth. This growth faces a persistent structural drag. The national debt has climbed steadily throughout the 21st century, recently surpassing 120% of the total GDP. There is also a widening gap between what workers produce and what they earn. Since the 1970s, labor productivity has climbed, while real wages have remained stagnant. Real wages are earnings adjusted to account for the actual cost of living. Economists call this a two-tier recovery. While economic growth benefits the top percentiles of the population, the bottom 40% struggle with the rising costs of basic needs like healthcare and education. While the macroeconomic data points point toward record growth, the internal transmission system responsible for distributing that wealth has begun to seize. A chronic housing shortage has pushed homeownership out of reach for the average worker in 70% of the country, creating a barrier to the nation's primary method of wealth accumulation. The human cost of this housing crisis is visible on the streets of the nation's wealthiest cities, where thousands live in makeshift encampments. These encampments exist just miles away from the largest accumulation of elite capital in history, concentrated in the financial districts of cities like New York. The United States has built the largest economic engine in history. The ultimate test is whether that engine can sustain a functional society for all 342 million of its citizens.